This is a lecture from Open Tuition. For the free lecture notes that go with this podcast, please visit opentuition.com.
Page 73, sources and impacts of business risks. Businesses face risk from a number of different sources. I think they're all common sense. It's just that if I were asked to sit down and think of businesses or risks that businesses could face, I think I'd struggle to try and remember all 9 of them. Market risks associated with a sector or industry. Are there any particular markets or industries that are particularly risky? Do you have any local ones, for instance, where it would not be unusual for you to say, oh, here's another restaurant maybe that's opened, I wonder how long this will stay in business? Do you have any classic local industries or businesses which are sort of here today and gone tomorrow? Fly-by-night businesses? No? Toy manufacture in the UK was never, I say was never, it was presumably historically, but traditionally now it seems that toy manufacturers struggle to continue to exist. So and one of the reasons is obvious, that there's been a falling birth rate in the UK for the last 25 years, that there have been fewer children born than people dying each year for the last 25 or 30 years. And it does mean that, is that the other way around? There have been more children born than people dying. There's a fewer children. It does mean that there are fewer people reaching working age, and therefore fewer people being able to contribute to social security and pensions. So that these people who are living a long time, those people living a long time, there are more and more and more people of John's age, for instance. There are more and more and more people getting up there, and there are fewer and fewer children working to produce the benefits to pay the old people who have now retired. So it's a difficult situation. Falling birth rate affects toy manufacture, because if you've only got a fraction of the number of children that used to be born on an annualized basis, then the demand for toys is going to decrease.
The immigration rate is very high in England.
Inflation or birth rate?
Immigration. Immigrants coming from other Europe, and not only Europe, and they all should have children. So I thought about...
I'm missing the first word, imitation?
Immigration.
Immigration. Yes, because all you lot are going over to the UK. You stay here. Yeah, but where people are going one way, there are other people going the other, like me. Not as many of me as there are of the others. One of the common questions we used to be asked when we first moved abroad, and they say, are you here on holiday? And we'd say, no, we live here. And they'd just look at us and they'd say, why? Why have you come here? Who on earth would want to come to our country, was the question they were asking. Immigration is on the increase. Well, I don't know. I think there's actually a tendency now to move back again, isn't there? And there seems to be a number of people from the Balkans who used to go over there, and now they've gone back to Latvia and Lithuania. No, that's not the Balkans, is it? That's the Baltics. So there have been a number of people going backwards and forwards. How did I get there? Oh, yes, risky businesses. Travel agents is another one. People who organise travel for customers. Travel agents tend to have a struggle in the UK. Do you have any similar ones that you can normally associate with struggling businesses? Or any industry sectors that... You did have a problem with your banks, I believe, about 15 years ago, didn't you?
Agriculture.
Say again?
Agriculture.
Agriculture, do you?
The climate is not so good as maybe in Spain to grow tomatoes.
Well, Spain has always been famous for its tomatoes. Seriously, Spain has always been famous. Was that a relevant comment of mine? Spain has always been... Did you say Spain was growing tomatoes?
Yes.
Well, they've always been big in tomatoes.
So
Spain is covered in tomatoes.
our tomatoes producers.
You used to have pigs. You used to have a major pig producing section here, pig producing industry, and the one up the road. They were famous for their pigs, and then Denmark took over, and Danish bacon is probably more famous now than Balkan bacon. Credit risk relates to the credit rating of the business and therefore its ability to raise finance. David Cameron, not David Campbell, your examiner, David Cameron, the Prime Minister in the UK, has just authorised George Osborne, the Treasury Secretary, the Minister of Finance, if you like, to put through some very strict, very strong public expenditure cuts. And he claims that if he had not done it, then the credit rating of the UK would have been dropped by the International Monetary Fund, by the World Bank. So, credit rating in a national context can affect us, in which case it's difficult to raise money. But for a company, clearly the problem is the same. I'm trying to think of a local one, but I can't. Have you had any local credit rating problems? Liquidity, risk of being unable to meet your debts as they fall due. Technology, failure to keep up to date. Legal, the requirement, the need to comply with law and regulation. Health and safety and environmental. Health and safety and environmental, very fashionable. Environmental keeps coming up in these exams. In P1, comes up over and over and over again. Environmental issues. Reputation, possibility of damage to the company's image from poor performance or poor publicity. Business probity relates to the governance and ethics of the company. And derivatives and the use of financial instruments generally causing business risks. And then we've got page 74 with a big table there which you can fill in. The sources of risks and the impact of those risks. The market risk. Will you tell me? What about a failure to provide goods which the market wants? The market moves, the market changes in taste. I've got in my mind people or companies which manufacture fax machines. I suppose that would be technology, really. Failure to provide goods which the market wants. What about environmentally satisfactory food products? So no fertilizers, organic foods. If there is, I don't know if there is here, certainly in the UK there's a growing demand for organically grown food. Food which is no fertilizers, no chemicals, natural pest control, and the market is demanding it. And if we fail to provide, if we continue to provide genetically modified food, then we're going to lose business, we're going to lose market share, we're going to lose reputation, we're going to lose a lot of things. So if we fail to provide goods which the market wants, then what's the impact? What's the likelihood? Can I say going concern problems? What about credit risk? Credit risk is the inability to obtain finance if the credit rating is reduced by some central reference agency. We're unable to borrow. And if we can't borrow, we'll find it difficult to obtain goods or materials. Because our suppliers will be demanding money quicker, or even pro forma, payments in advance. So we've got difficulties in obtaining materials. If we have difficulty in obtaining materials, we can't produce the goods the market wants. And if we can't produce the goods the market wants, then we have going concern problems. Liquidity, this is where our own customers are not paying quickly enough. And if they're not paying quickly enough, then we have cash crisis. And if we have a cash crisis, then we can't pay our suppliers quickly enough. And so we'll take excess credit from the suppliers, and the suppliers are not going to be happy, and credit rating falls. And if credit rating falls, we're not going to be able to get the materials quickly enough, because the suppliers are demanding cash payments or payments in advance. So if we can't get the materials, we can't then produce the goods that the market wants. And if we can't produce the goods that the market wants, then we face going concern problems. Yeah. Cash crisis, unable to pay suppliers on a timely basis. And that could go to going concern problems. Technological risk. We have a lack of investment in research and development. And if we have a lack of investment and competitors don't, then the competitors will gain market share. And that could lead to us having substantial overcapacity. If they're taking our market share and we've still got the capacity to produce at the same levels, the old goods, the not new technology goods, then we're not producing the goods that the customer wants. And if we don't produce the goods that the customer wants, then we're facing going concern problems. Yes, if we failure to produce new products, if our products are out of date, then we're going to lose market, revenue, and that itself can lead to going concern problems. Legal, we're looking here at breaches. Breach of Constitution, breach of Companies Act. Maybe we get sued by injured parties. We may be fined if we breach the Companies Act or breach some legislation which is relevant to us. And then we're going to suffer. We're going to suffer adverse publicity. We've got fines and penalties. We get possibly closer monitoring, people looking to see if we're breaking the laws again. But if we get adverse publicity and fines and penalties and loss therefore of reputation as well, or maybe the gaining of a bad reputation, what's going to happen to us? We're going to have potential going concern problems. Do you see where we're going with all this? Yeah, we're potentially going to have going concern problems. Adverse publicity means the market, our customers, are not going to be happy with us. It happened with Arthur Andersen, didn't it? Do you know what happened with Arthur Andersen? The adverse publicity that they suffered as a result of this ill-advised activity from a partner and a manager in Texas. And the adverse clients did no longer want to be associated with Arthur Andersen. They did not want the Arthur Andersen name associated with them. And so the clients just left Arthur Andersen with nothing. Health, safety and environmental, breach of relevant legislation. The company in an industry or in a business which is contentious. So you've got two different ones there. As with many of them, I've got two different ones. The contentious business, and I've got in my mind now tests on animals by drug companies, where the drug companies are exposed by the newspapers because the drug companies make small dogs smoke 60 cigarettes a day and then decide whether the dog is healthy or not. Well, it's a contentious area, it's a contentious issue, and if we do find ourselves in that business of testing drugs on animals in an adverse way, in a bad way, again we're going to have adverse publicity. We could face fines and penalties. And we could be facing substantial payments in respect of damages to people that we injure as a result of our breach of health and safety regulations. Fines and penalties and damages, which would, all of them will put pressure on our cash. And that means we probably get down-rated by the credit agency, and we're unable to get goods on credit, so we won't be able to produce the goods which the public want. And if we can't do that, then competitors will move in and take our market share, and our reputation will go worse and worse, and eventually we're facing going concern problems. Reputation, I just mentioned reputation then. Poor quality production. Product recalls. Claims against the company. Product recalls, bad reputation, loss of market share. Do we know any, for instance, motor manufacturer that's recently had some product recalls? Yeah, Toyota. They've just announced, I think it was 2 weeks ago, that they're calling back another $1.5 million. Last year, or earlier this year, they called back 10 million. Now there's another $1.5 million. Only little bits that's going wrong, but just bring your cars back and we'll just change things. I forgot what it was now, because I don't have a Toyota, and I probably won't get one now either. Reputation, loss of market share. I'll go and find something else, Moscovich or something. A Lada. Loss of market share. I'm looking at going concern problems here. Business probity, illustrations here will be directors getting outrageous bonuses, where the workers are only given a nominal pay increase. Do we know any sectors, any businesses where their employees get outrageous bonuses despite the company, despite the industry, potentially causing huge losses to the public? Banks, yeah, the banks. Certainly in the UK, the banking system, the bankers are now profitable again, having been rescued by the government. And so they're now, because they're profitable, they're paying enormous bonuses again to their employees, despite the fact that it was my money, which I've given to the government as a taxpayer, that the government then uses to help the bank. And now the bank is back on its feet. The government still owns the substantial part of the banks, but now the bank are back on its feet and going again. They're now paying huge bonuses, and it was my money. And yet they start charging me £30 to send me a statement, whatever the figure is. So business probity, it's a sector in the UK which is probably less than open, honest, less than fair. So adverse publicity again. And in the bank, I don't see it's got going concern problems with the bank. Oh, that's not fair, is it? Of course they do have going concern problems. Trying to think what the bank was called now. The building society. Northern Rock Building Society is in liquidation as a result of I don't know if this is a result of business probity. They went into liquidation on the basis of poor banking, the same as all the other banks were struggling, but they went into liquidation, like Lehman Brothers did. And derivatives, examples: losses made on forward contracts. Financial statements don't necessarily fairly reflect, not fairly reflecting the risk. That's going to lead to financial stress, loss for the company. It's going to be adverse publicity. And if I suffer with financial stress and adverse publicity, then I'm looking at going concern problems. We had there was one Société Générale in France about 2 months ago, a month, 2 months ago, where their employee, by reckless, unsupervised trading, cost Société Générale, it was an immense figure. I think it was billions that he lost the company. The company nearly went into liquidation as a result. This man has been taken to court. I can't remember his name, he's a Frenchman. He's been taken to court, and the court said, yes, it was his fault. The directors couldn't have known. They couldn't have known about the activities of this man, which seems a strange decision for me. And the court has demanded or ordered that this man should pay back the 84 million that he's cost the bank. Well, how is he going to do that? It was the bank's money. He took a risk with the bank's money, and the bank lost a lot. We had our own in the UK, a man called Nick Leeson, who put Baring Brothers. He'd killed off the Baring Brothers bank. And Baring Brothers had been a bank for over 200 years. And Nick Leeson was the manager of the Barings Bank in Singapore, and as a result of his activities and the derivatives market, he destroyed the bank. In about 6 months, he just gambled the bank's money, and his gamble lost. So Barings Bank is now in liquidation, or it was, and was then sold. I think it was sold to Ing Bank, and I think it was sold for $1. But I may be wrong on both of those things. I may be wrong.